what's up guys, welcome back to the channel. In this video, we're going to be talking about different crypto-backed loans across different C5 platforms such as Blockfi, Celsius, Nexo, and Crypto.com. I'm going to be comparing different loan details such as LTVs, interest rates, payment terms, things like that. And then towards the end of the video, I'm going to share with you guys my honest opinion on which platform I believe has the best loan term. Now guys, I actually plan on getting a crypto-backed loan for myself. I had some credit card bills that racked up in order to pay for my personal expenses. And as many of you guys know, I don't really have a lot of cash in the sidelines. Most of my assets right now are deeply embedded into crypto. And with that, I don't really want to trigger capital gains tax. So if you've been trading crypto like me short term, you can trigger up to a 37% capital gains tax. If you've been trading long term, you can still pay 15 to 20% capital gains tax. So I don't really want to trigger that right now, especially with the uncertainty of when we're going to peak in the bull market cycle. So with that, I want to use my crypto-backed loan in order to pay for a credit card bill that racked up in my personal life. Before we get started, I would definitely appreciate it if you guys give me a thumbs up below. And subscribe to my channel if you haven't already, guys. I'm really close to becoming a full-time YouTuber, living my dream of becoming a full-time YouTuber, and any help from you guys would greatly be appreciated. All right, guys, so the first platform that I want to bring up is going to be Nexo. So this is what the Nexo platform looks like. So if you guys can log in, you can use your computer to log in. You don't have to use your phone, unlike other platforms like Crypto.com and Celsius. So with Nexo, you can use your computer, which is what I'm using. So for Nexo, in order to borrow collateral, you can deposit things like Bitcoin, Ethereum, whatever assets you can see here in the Nexo platform, you guys can deposit this and borrow loans using these types of assets. Now, let's take a look at details. So if you guys click on this borrow tab right here, this borrow button, so you're actually required for stablecoins, if you require stablecoin transfers such as USDC or Tether, they require a minimum of $5,000 for stablecoin transfers. And for bank transfers, if you want to deposit fiat to your bank, they require a minimum loan of $500. All right, so for stablecoin transfers, funds are transferred immediately to your Nexo account, which you can move around into different platforms like Coinbase, Blockfi, whatever you want to do. For local bank transfers, it can take the same day or maybe the next business days. If you live outside the US, it can take 2 to 5 business days. So it definitely takes much longer if you live outside the US. So let's talk about the credit line terms. Now for credit line, maturity is up to 1 year. They have shorter terms, but for them, the maximum is 1 year, which may be renewed on request without repayment. The period starts after your first loan withdrawal. So with Nexo, if you have Nexo, the token, they have a native token called Nexo. So if you have that and you have the proper amount, you're actually only charged 5.9% APR. But if you don't have Nexo token, it's 11.9%. So for those of you guys that want a loan and you don't have Nexo tokens, it might not be a good idea paying 11.9% interest rates on your loan because you have so many platforms, traditional platforms like Sophie, Wells Fargo, things like that in the US where you're paying much less interest, such as 9%, 10%, without having to give up collateralized loans such as Bitcoin, Ethereum. But if you have Nexo tokens, 5.9% is a pretty decent yield, in my opinion. All right, guys, so for credit card repayments, no minimum are required as interest is debited automatically from your available credit limit. You can repay all or some of your loan early at any point, guys. So they don't charge you an interest for paying early. They only charge you interest for the days you borrow. If you decide to pay your loan early, they don't have a prepayment penalty. All right, guys, so finally, the most important thing is talking about the margin call. So for those of you guys that don't understand margin call, so basically, let's say you deposit $100,000 at 25% LTV. So you would get $25,000 in stable coins or USDC, whatever. So right there, your LTV is 25%. But let's say the value of Bitcoin, of Ethereum goes down, and let's say the $100,000 goes down to $50,000. Now your LTV is 50%. So let's say this company has a margin call at 50%. So you would actually get a margin call, meaning you would have to fund that account, or they would sell your Bitcoin, your Ethereum, in order to decrease your LTV. So basically, the lower the LTV, the healthier the loan is. So for me, in my opinion, 50% is quite high because most of these platforms initiate margin calls at 65% LTV or 71% LTV. So I don't really like to get loans at 50% LTV because that is quite high and not healthy. So in my personal life, I will personally pick something that has 25% LTV, meaning I have 25% of debt versus a 100% assets, like fair value of my collateral, basically. All right, let's take a look at Nexo LTV. So with Nexo, they initiate margin calls at 71.4%, as you guys can see here. When your debt levels equal 71.4% of your asset, which is extremely high, guys. So basically your debt is 70% of your total assets because it drops so much. So with Nexo, they require you to deposit more collateral. So let's say you deposit Bitcoin as collateral, they will require that you deposit Bitcoin to decrease the LTV. Right, now let's go to crypto.com. Now, crypto.com, you can borrow up to 50% LTV on your crypto. And let's take a look at the details for crypto.com. Now, with crypto.com, you can deposit as low as $1,000. So you can deposit as low as $1,000 collateral, and you receive 50% of that in PAX, TUSD, USDC, or USD Tether. You receive 50% of that, so that's $500. And you can deposit assets such as CRO, BTC, ETH. You guys can read this list right here. You can deposit any of these assets, and they give you 50% LTV. Now with Crypto.com, they have two different options. Either you have the CRO debit card at $40,000 of value. With that, you only pay 8% passive annually, and you're charged $3.33 according to this loan. But if you don't have the debit card at $40,000, you're actually charged 12%, guys. So in my personal opinion, 8% and 12% is extremely high. So just me personally, I think that Crypto.com loans are not worth it. These are extremely high interest rates, 8% and 12%. I believe that you can get better interest rates from Nexo. Again, you guys can make your own decisions. So in my opinion, Crypto.com loans are actually not that amazing, given the fact that it's 8% and 12% interest rates for those loans. All right, guys, so the next platform that we're going to talk about is Blockfi. So with Blockfi, there's much more limited collateral types compared to Nexo and Crypto.com. So with Blockfi, you can only deposit things like BTC, ETH, LTC, and PAXG. So very limited compared to other platforms. So now let's talk about LTVs. So with Blockfi, they have a minimum loan amount of $10,000. So they require that as a minimum. So let's take a look at that. For example, $10,000, calculate your loan. And let's say we're going to deposit BTC as a collateral. Okay, guys, so with Blockfi, they have two types of LTVs where I live in Texas. So they have 35% LTV or 20% LTV. So with 35% LTV, a higher LTV, obviously you're going to pay a higher interest rate, 7.9% interest rate. So with a lower LTV, 20%, 4.5% interest rate. So in my opinion, guys, Blockfi and Nexo so far is my favorite, especially the interest rates. Crypto.com, for example, 8% and 12%, that is extremely high. So you're getting much lower interest rates for Blockfi. I know that Crypto.com allows you to do 50% LTV, so that's why they're charging higher interest rates. But for me, that interest rate is just way too high for me. I can get those interest rates at traditional banks such as like Sophie and other traditional platforms like we have here in the US. So in my opinion, Blockfi is pretty decent at 20% LTV or 35% LTV. Last but not least, we have Celsius. So with Celsius, you can actually deposit any of these collateral and get crypto-backed loans with it, such as Ethereum, Celsius, Bitcoins, SNX, Polygon. So whatever assets you see in this list, guys, you can deposit these and get crypto-backed loans with that. So let's take a look at some details for Celsius. So Celsius, you can get a loan as low as $500. I believe $500 should be the minimum amount. So yes, $500. And your loan term can be as low as 6 months or up to 36 months, guys. So in terms of interest rates, it doesn't change whether you pick 6 months or 36 months. But in my opinion, guys, might as well do the 36 months because you can pay off the loan early. They require you to do 6 months of interest minimum. So as long as you pay 6 months of interest, you can pay off the loan early. But with that, might as well do 36 months because of that fact. Now with Celsius, again, you can deposit any of this collateral that they have in their platform, such as Pax Gold, things like that. Polygon, whatever assets they have in their platform, you can deposit. Now with Celsius, they have a 25% LTV option. So 25% LTV option, your loan is only going to be 0.75% if paid in Celsius. If paid in cash, it's going to be 1%. So even if you pay your loan in cash, at 25% LTV, 1% is really amazing, guys. That's awesome. I mean, honestly, the best platform I see right now is going to be Celsius. I don't see any other platform that can beat Celsius, even at 25% LTV. At 33% LTV, the APR jumps to 6.95%. Right, so compared to Blockfi, it's pretty even. At 35% LTV for Blockfi, you pay 7.9%, but for Celsius, at 33% LTV, so a slightly lower LTV, you pay a lower interest rate of 6.95%. Now, 50% LTV, you pay an 8.95% interest rate. So again, in my opinion, I believe Celsius has the best loan terms. Just the fact that they're able to offer 25% LTV at 1%. So if you pay that in Celsius, it's even cheaper. So if you have Celsius tokens and you want to pay in Celsius, it's even cheaper. All the way up to 50% LTV, 6.71% interest rates if you pay in Cell. But guys, for me, I'll probably just use pay in cash because I don't really want to sell my Celsius tokens to pay interest rate. I want to hodl Celsius tokens. So with that, I'll probably just pay in cash at 25% LTV. All right, guys, so last but not least for Celsius Network, their margin call is at 65%. So compared to, let's say, Nexo at 71%, BlockFi, I believe, is at 70%. So Celsius, I believe, has the lowest margin call requirement. But, I like to keep it safe anyway. Just the fact that Celsius has 1% interest rates on their loans, to me, that is a no-brainer. I believe that Celsius Network has the best loan terms between Nexo, Crypto.com, and BlockFi. So now this is part one of a two-part series video. And in the next video, guys, I'm going to show you a step-by-step example on how to take out a Celsius loan, in which I will be doing in my personal life, guys. I actually plan to take away a personal loan for myself in order to pay for my credit card bills. All right, guys, I hope you enjoyed this video. Again, if you haven't liked the video already, please like down below and subscribe to my channel if you haven't already. I'll see you next time.